Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES mostly balanced within a range. On Friday, we saw a failed breakout attempt, which led to some weakness. And in the overnight session, ES went down to 93, where responsive buyers were active. At this point, heading into the open, the market is very balanced, and buyers can still maintain control above 93 quarter to 95 quarter initial support, and especially above the 98 half prior VPOC and prior close. On the upside, we have short-term resistance at 2102 to 2104. That's an area that has already been tested in pre-market. So at this point, if we start heading up there with any kind of momentum, we may not really stall there anymore. And ES could go back up to 2107 to 2109, which is the next inflection point. Now, today the market does have potential to go directional one way or the other. We still have a couple of economic reports out later on this morning, which can serve as a catalyst for a short-term directional move. So as long as the market's holding above 93 quarter and 95 quarter, it's not really a bearish market. The buy side can still maintain control. And I think it's really going to be helpful if you're keeping an eye on the Russell. So if you watch the TF, watch the breakout from Friday and watch the overnight low in the Russell around the 29 to 31 zone in the Russell. As long as TF is holding above that, it still tells you that the breakout is intact and ES can go higher too. On the downside, if we get a break below 93 quarter, 95 quarter, we can go directional down to the 86 quarter to 88 quarter zone and the 84.75 support level. Now, first test, that area can still attract responsive buyers, but if we're going down on heavy momentum, then it could turn into a short-term balance breakdown, leading to a move to 77 to 79. So that's something that you'll have to gauge in real time just to see the level of weakness and the downside momentum as the market goes down, if the market goes down. And on the upside, again, as long as we're holding initial support and that 98.50, then there's still potential for an upside break for a retest of 2107 to 2109 and possibly for a move up to 13.5 to 15.5, filling that gap at 14.5. So those are the main ideas today. The market can still tip in either direction. We do have a couple of econ reports out that can serve as a catalyst for that directional move. But overall, we are still more or less stuck in a range, stuck in a balance. The buy side has been stepping in on pullbacks, but at the same time, we've also seen sell side step in as soon as the market hits resistance. I think today we are probably not going to see as much of an aggressive sell response if the market starts to hold here and go up. I think then it would be a bit more risky to short the market unless you're seeing something in real time. Like, for example, if the market goes up and there's just no real momentum behind it, or if there's a big disconnect in the advanced decline and the price, then that would be a real-time read and that can result in a short setup anyway. But if everything else is looking okay and the AD is climbing and looking higher, and then we start going higher, then we may not get as big of a rejection as we got on Friday. The market rarely does the same thing two times in a row. So this time when you go back up, you have to be a bit more careful on shorting the resistance zones because they may not really provide as big of a failure. So the idea is that if the market is going to go down, it's probably not going to go all the way back up to 0709. It's probably going to hold then in that case below 98.50 and below pre-market resistance. But if it does start breaking out, then the buy side would be in control and we could potentially go up to 13.5 to 15.5. And similar idea on the downside that if you go down the 86 quarter, 88 quarter, it can still provide a reaction and responsive buyers can step in, but it may not be enough to completely shut off the downside. So if you're going down on heavy momentum, you may go down to 77, 79. At that point, it may turn into a bigger move on the downside too. So keep an eye on the relative volume, in real time. Keep an eye on the momentum situation to see, hey, does it really support the idea of a directional move one way or the other, or is it really more balanced? And that'll help you assess the type of day that you're into. But given the large volume at the 98.50 that we saw trading on Friday, the market is gearing up for a directional move. Doesn't always have to happen exactly when we expect it to, but something here is in the works. The market rarely balances for too long in a range. Typically, you will get a break one way or the other after a few days, and given the fact that we have a lot of econ reports still pending today. I think, today there is potential for that move to take place. So just be a little bit more cautious on entering fade setups unless, there is a real-time reason to expect the move to end there. And, then it's fine. But otherwise, be a little more cautious on fading momentum and directional moves today. So those are the main thoughts heading into the open. Keep an eye on the 98.50 initial support. That will help set the bias for the day, and we'll take it from there.